Hello, everybody. Welcome back to the Penny Lane podcast. In today's special episode, Ellis sits down to have a conversation with one of his biggest trading mentors, Breaking Options. Brian is a wealth of wisdom and knowledge as he shares his experiences through 25 years in the markets. They discuss surviving the dot-com bubble while being owed $250,000 by WorldCom, being your own boss, his biggest regrets in trading, and much more. A huge thank you to our sponsors, Pennies Going in Raw, Last Bottle Wines, and the Personify app. If you enjoyed this episode, please don't forget to like and subscribe.
The stock market is hotter than ever right now, and traders are taking advantage. But what does that mean for the people who still haven't started trading? The market can be a little intimidating at first, but you don't have to be alone in the learning experience. We at the Pennies Going in Raw podcast are here to help you. I'm Dan, and with my co-host Hugh Henney, we make the stock market a fun but informative experience for our listeners. We offer knowledge for all levels of traders, from beginners to those who do it full time. On PGIR, we discuss up-to-date news about the stock market and interview other traders who all started out just like us and made it big. You'll hear from Hugh and other multi-millionaire traders, founders and CEOs of companies, FinTwit superstars, and even professional athletes. Have you ever thought about investing your hard-earned cash but don't know where to start? Do you have money just sitting in your savings account collecting dust? We were all there once too. Listen to Pennies Going in Raw on the iHeartRadio app, on Apple Podcast, or wherever you get your podcasts.
Brian, welcome to the Penny Lane podcast. Long time coming.
Yep, excited.
Yeah, this is your first podcast, I believe, right?
First podcast ever. I spend all day talking and trading with everybody, but my first actual podcast.
I know. I feel like a lot of people. One thing I always compliment you about is how you're always very business when it comes to trading. You don't really share too much about your personal life. I do know your sons play hockey. We were talking in the pre-show. He broke his arm in a couple places. And that's really all I know about you. And I feel like a lot of other people feel the same way. So I thought this would be a good opportunity for everyone to get to know you.
Oh yeah, definitely. For sure.
So, we'll start with the basics. How did you get into trading? So I know you did release a newsletter a couple of weeks ago saying that you started trading in the dot-com bubble, right?
Yep, I actually majored in options and futures trading in college. So I went to college obviously during the dot-com craze. And there was an options and futures class taught by probably a young 30-year-old guy. And it was, 8 o'clock till 9:30 at night. He only taught at night because he worked for Goldman Sachs during the day. And then he'd go out drinking with all of us. But totally learned.
Sounds like a Wall Street.
Yeah, it was crazy. He drove a Porsche. I think he was hitting on half the girls in the class, and they all got A's. But that's how I learned. And I learned straight from a guy from Goldman Sachs. I don't even think these classes even exist anymore. But I learned regular options trading. I mean, there was no 0-day expirations. There was once a month. That was it. There wasn't weeklies. None of that existed.
And you also had to call in back in the day too, right? It wasn't all digitalized. I guess that's a word.
I started 98, so I was like one of E-Trade. I still use E-Trade. I was one of their first customers. But you were doing slow dial-up, you know how the internet was in 98. It wasn't great.
Yeah, so, no, you would sit there waiting for the dot to go across the screen.
Especially on a busy day during the dot-com bubble. It was going crazy. You'd see tickers going, and I mean, these things would move, 100 points a day, some of these stocks. Half of them don't exist anymore. We say CMGI. That was like the big dog, the $300 stock that would literally have a 80 to 120 point range a day.
That sounds dangerous. Really dangerous.
It actually wasn't as bad because you couldn't even get approved for options like as a new trader. Like it was hard. I ended up getting approved, but they weren't even as liquid. It was more used for institutional hedging. So I was just trading stocks back then, purely equities.
So just straight equities. So the dot-com bubble, would that pique your interest into the stock market, or did you have any family history?
I was always interested. My dad's best friend was the pension fund manager for U.S. Steel for 40 years. So learned a lot from him. That was more bond trading. He actually traded the corporate bonds and pursued it. And then I graduated college in 2001, right after the dot-com bubble. Had a nice job lined up actually doing derivatives. But after the dot-com bubble and half the people losing all their accounts, Merrill Lynch wanted me to basically cold call. I'm like, I could do anything in sales. I'm not cold calling family members to try to get them because half the world just lost their brokerage accounts.
Wow. So you had a job lined up for Merrill Lynch, and then they wanted to, I guess, acquire new customers, but everyone has lost, 80% of their money. So they're like, yeah, screw you guys.
Oh yeah, totally pulled. All the jobs were pulled. Like, I was going to be a derivatives on the options desk with a major options trader, learning through him, but that whole business disappeared overnight. I mean, you got to figure like 70% of retail, kind of what we're seeing now. I mean, I see similarities just from people not tweeting anymore and not talking about it. Like you go out and you hear everyone talk about this and that. I remember I was at a hockey tournament with my son last summer, and they were talking about AMC. Two kids just at a pizza place, probably I don't know, late 20s. And I'm like, guys, this ain't gonna last. If you have all your money in AMC, please switch. I just stepped up to them and told them, please switch, get into a little Home Depot, a little of anything.
Yeah, something. It's funny. There's always the old age homage, right? If your barber is starting to talk about a stock, you should probably be selling. And I was at the barber shop and they're talking about the GameStop, and I'm just sitting there and I'm keeping everything in. I've been trading for a good amount of time, and I just want to keep it in because people that aren't in the markets every day just don't understand what's really happening. And I'm sure there's people who are still holding for today, saying the naked shorts haven't covered, right?
Yeah, oh, definitely. 100%. And I'll tell you one thing. All these stocks from the bubble, they never came back.
Really?
Look at a Cisco 20-year chart. I could probably pull it up. We're at 20 years. You have to go back 21 years. Cisco's never recovered from the dot-com bubble.
Someone compared NVIDIA to Cisco, the chart, like the line chart. And I thought it was interesting how it kind of has a lot of similarities.
But I'm pretty sure that was one of the companies that obviously never left didn't disappear, right? Still a mainframe company. Big
Yeah, but
company.
people that bought it back then never became green on it, right?
Well, it went to, I just remember them talking about this one. I mean, half of them are gone. Pets.com, anything.com. It's kind of like there's a very similar comparison to what was going on with crypto. I saw it going on at least. All these companies, and I Googled some of them. I know some of you guys, I don't know about you, but I know people would always ask and we're trading them. Like this BBT or some of them? And their office was the back of a deli in Flushing. I'm like,
yeah,
you Google their address. I'm like, actually, know what it is. That's near City Field. That's like, it's the back of a deli in Flushing. I'm like, that's crazy. But that's what you saw with the .com. I mean, they could be in anything business back then, and they just add .com to it. They could literally be like, I don't know, they could be selling celery to supermarkets, but celery.com, and it would go. Cisco's high was 70. Let's see, what does that say? $82 in March 01.
What's it at now?
Today we are at, it's recovered a bit. But look at a 20-year investment. It is at $45 as of close.
So you're still almost 50% in the hole.
I don't own this. I'm just giving you an example of.
I know.
Of these things never come. Like if you're sitting on AMC at 60 and GameStop at God knows what, maybe one of them will eventually come back. Maybe a ZS Scaler or something like that. But most of those high PE ratio stocks, just in my opinion, just from seeing it before, they're not all going to exist.
Now, I don't know if you know this, but I always mention, so I consider you one of my mentors when it comes to options trading, because I don't know when I joined your room or how I found you, but I remember you used to have these like risk spreadsheets, right? Like really simple Google Docs. And I remember when I first started trading, I had no idea what risk reward was. And then I started using your spreadsheet. And I just remember that moment, like, I used to full port every single play, like, almost like a degenerate, but now I feel like I'm a lot more reserved. So I always mention the podcast, so I think people are going to be interested to finally hear the voice to the name, right?
I think you taught me what YOLO meant. I had no clue. I see this popping up, and I see YOLO. I'm like, what the heck is a YOLO?
I know. Hey, you're not that old,
In the ticker, I'm like, what is YOLO?
I'm pretty sure I said that. I think I said that on Friday. I was like, yeah, did I grab some YOLOs on oil? You're like, dude, just wait till Tuesday. I'm like, you're right. Back to the beach.
What did I tell you? I told you it was going down today.
Yeah, you did. Yeah.
I mean, that is one of the most seasonal macro trades is right after Memorial Day weekend. Go short oil.
I closed my first lot for like 150% because I wasn't even at my desk today. I was basically tanning all day outside. So Yeah, I closed it for 150%, and I just rolled some. You also told me what rolling is too.
Yeah, very
Now,
important. Very
you're
important way
a
to take risk off the table.
how would you explain rolling to someone that doesn't really know what it is? Because I feel like it's used a lot, but people don't know what it is. So if you were to put it in simple terms, what is rolling?
I mean, the best form of it, you're only going to roll a stock if you still believe it's going to go up. So let's just say Apple 150s, okay, and Apple hits 152 and you're in the 150 calls. You'd roll to the 155s for two reasons. You think it's going to keep going, number one, and those 150s, maybe the delta went up to like 65, 70. So you want to lower your delta exposure, basically, take some money out of the table, but still have the same size. So you don't use money when you roll, you use contract size. That's the key.
Okay.
Because otherwise you're just going all into a deeper, further out of the money contract. So it's a great way for discipline to take the money off the table.
Now I want to touch back on the .com like bubble. So you mentioned that you went to school for options derivatives trading. They do have I do a finance degree, so there is a lot of similar classes to that, but it's much more high level of like they don't explain Greeks to you or anything like that. It's mainly for like portfolio hedging. So how did you, from what I understanding, I think you went into the phone business, right? After that?
Yep. So I was going to Hofstra. I was going to
Okay.
Hofstra. Most of the classes were night school. I did that on purpose because I based it around some of the financial classes, and most of the teachers of the financial classes actually worked at like Goldman Sachs and the banks during the days. So they only offered the classes after 4 o'clock.
Okay. Makes
So I
sense.
just made my whole schedule night school, and I just worked. Think about it, it was 1998 back then. So cell phones were first started popping. So I just worked at a cell phone store. I actually started with beepers. I was doing beeper repairs for the guy. Then I got into sales. Then I was selling cell phones, and we used to sell. You wouldn't even believe it. Probably 3 to 1,000 cell phones a month with plans.
That's insane. Well, now the market's so saturated that everyone almost has two phones. Like I have two cell phones, right? Like,
Oh, this was Google the what was it? Motorola 550. That was the big phone. And then a few years later, I don't even know if you know what this is. The StarTAC.
nope. I grew up and my first phone was a Razor.
Oh my
So,
God.
yeah,
The
Brian. I'm
StarTAC. I mean,
26.
you're talking about analog. You're talking about you'd pay $30 a month and you get 15 minutes. And that's it.
That's insane.
You buy a StarTAC back then when it first came out, you pay $1,000 out of pocket, and people would fight over them like we couldn't get enough.
Wow. Now, I think from the Zoom calls, I remember that you worked in the cell phone business for a while, right?
Oh yeah, I worked at a store throughout college. Then when I graduated college, since that was 2001, after the dot-com bubble, I did
Yep.
not want to be a cold caller. I learned so much from working in the store. I opened my own two stores, and I actually opened a telemarketing business with all the big boys: Verizon, unfortunately WorldCom, AT&T, and back then it was OmniPoint. That's before T-Mobile. You guys probably don't even know what I'm talking about, but it was
Nope. No, you're
OmniPoint.
showing your age, Brian.
Yeah, no. OmniPoint, then they turned into VoiceStream, and then T-Mobile. So I opened stores, and that's just when they started that telemarketing stuff. I was renting like 500 seats in India, and it would cost
Wow.
virtually nothing for
Yeah,
them to call
pennies to the
into the US
dollar.
and sell. And we had a great conversion rate. Like I wrote the script, they were calling, I was managing, I got 150 people that would qualify the leads from India because they'd send over anything.
Yeah.
Like they tell the person you get 5 free phones. Yeah, I'll take 5 free phones. They left out the part that they're going to get 5 bills with tax and contracts and plans. So we had 150 people in my office in Hicksville that would then requalify the leads to make sure they're real and get it down to the right way.
Now, I think you took that company public, right? Where someone bought you out?
This company was Century Communications. This one, so this
Okay.
one I had a partner in it, one of my friends, and after, well, you know what happened to WorldCom, right?
You may want to refresh your viewers.
Okay, so WorldCom pulled an Enron, went to zero
Oh,
overnight,
nice.
owed me $250,000, and we figured we were shutting down the business. We had 2 stores. I was gonna try to pursue finance again, see if there were basic jobs available. This was 2005. So the one thing we had from telemarketing is we had huge warehouses. So we had like 2,000 phones in stock, Nokia 5160s. Now I'm aging myself again.
Yo, Nikias, they probably still work till this day if they're still in that warehouse.
Oh no, we saw. So here's how the next leg of my cell phone business came. So I told my partner, I go, listen, just buy me out of the stores. You could run the two stores. He goes, just do me a favor, help me move these 1,000 or whatever 2,000 Nokias because we'll never sell them in the stores. There'll be new phones by the time we could get rid of half a quarter of these. So I just happened to post on some website, and I didn't realize there was a whole international business where I would get these Nokias for, I don't know, $40 from AT&T because we would sell them with plans. And this was from WorldCom. Meanwhile, the phone actually cost $150. So I called up some guy. I posted him that I had the 2,000 phones, and I'll never forget this. Some guy locally goes, "Do you really have the phones?" And I'm like, "What do you mean? Why would I post it if I didn't have it? It was just some cell phone website." I said, "Of course I really have them." So I knew I paid $30 or $40. Guy offers me $140 a phone. So of course, I'm like, okay, this guy's just jerking me around, right?
Yep.
Am I really going to make $200,000 off of this? So I'm just silent. I'm like, I think I had him on mute. He goes, "I'll bring cash tomorrow." So now I think this guy's really jerking me around. So I gave him the address. He showed up with $280,000 in cash.
Oh my God.
So then I sent them, and well, he was sending them to either India or Caribbeans. I don't remember where they were going. So I then sent them back and said, "Could you get me two cashier's checks? One for me and one for my partner." He goes, "But you said cash. It took me all day to get this." I didn't even know. I said, honestly, I didn't think you were coming. And then this nice Indian guy actually explained to me the business of wholesale cell phones. Like I only knew activations, sell the plans, get your residual, get that residual growing, and just keep upgrading people. And then I was so sour over WorldCom owing me money, and then another AT&T. AT&T had a hard time because they got screwed from WorldCom. So they took, I don't remember what it was, 25% off everyone's owed commissions because you always paid 60 days later. So you're laying out the money in front. So I'm like, forget about this. I'm like, if I could just buy and sell the phones, I knew all the contacts. I knew all the people at all the companies because they would take us out all the time. So then I basically started a wholesale business.
You've always been an entrepreneur, haven't you?
Other than baseball cards when I was 13 and cell phones, I like the entrepreneur side.
Because a lot of people nowadays, right? You go to college, you get your 9 to 5, you kind of work up the corporate ladder, but your story is not traditional. Like I'm sure you have friends and some of your kids' parents stuff who just got the 9 to 5, but I feel like you always took a different route. Do you think you were just born that way, or just the way your life panned out?
I always had the drive to make my own money, and like I worked at a beer distributor when I was in high school. Like great job, obviously. Got beer in high school.
Oh yeah,
free.
Sick job.
So that was just for fun. But I learned a lot with business through the cell phone store, and I'm like, and just running the businesses. Like I came straight out of college, ran a business. I had my friend's father started us off with $100K, let us open 2 stores, sign leases, got us credit lines. So I was learning on the go.
You just were all in, just hopped in and like, all right, we're going to figure it out.
And one of the best lessons I learned was when we got stiffed out of $250,000 from WorldCom, because I learned there's a bad side of business because it was all straight up from them. It's like anything we did just kept working.
So no matter, so it was almost like it was a good thing that happened, right? Because it taught you a lot.
Definitely learned about risk. It was actually the first lesson in risk, because to be honest, my friend at WorldCom told me they're going under. They're not going to pay you. So they probably owed me more than that, and he told me to take every piece of inventory they'll give me. It was those phones.
Wow.
So basically, lessen the risk of, because you're allowed to take phones against money they owed you. You could always borrow against what they owe you. Basically, they would just cut you less of a check when they would eventually pay you. But this eventual payment was never coming. So he goes, take them out of everything. And we literally took everything, like as much as they give us, everything.
Irrational exuberance? When it comes to killer wine at drastically low prices, 30 to 70% off retail and free shipping, we live for that here at Last Bottle Wines. Whether you went long or short on GameStop, you'll need a glass of something terrifically tasty, and we've got the goods. Last Bottle is a daily wine site based in Napa, California. One wine every day at Black Swan event prices, usually 30 to 70% off until, poof, it's gone. Whether you're a pound-the-table type, think ultra-crisp, quaffable Sauvignon Blanc, or a dividend aristocrat, Burgundy, or Napa Cab, there simply is no better place to buy wine on the web, and they always have free shipping. Last Bottle has a deal just for Penny Lane listeners. Use promo code PENNY10 to save 10% on your next order with Last Bottle. The code is good for one order and one order only.
Alrighty, well, welcome back to the Penny Lane Podcast. We're here with Brian. We're talking about his earlier years of being an entrepreneur. So WorldCom owed you a bunch of money, and then you just kind of learned business on the fly. We spoke about entrepreneurship and making your own money. So what happened once the wholesale business started going, we'll say crazy, right?
I literally grew it and grew it and grew it and just kept. I'd get a warehouse. I'd literally outgrow it in 6 months. Get another warehouse, outgrow it. They started selling cell phones online, so that was the big thing with the pop-ups. It was called, I think the company was called Simplicity. They actually got bought out by a public company now. I can't remember who, but I remember I got a phone call and the guy's like, "We just got bought out, but the company that's buying us doesn't want any of the inventory." So he called me. He's like, "Do you want the inventory?" Because you got to come down to Maryland. It's a fly-in by, it's called. So I drove down to Maryland. It's freaking, I don't know, it was like a 50,000 square foot warehouse. You get a spreadsheet ahead of time to make sure that you want the stuff. We start going through phones and boxes. I went down with my brother, my best friend who worked with me. My brother was working with me at the time while I was still at college. And I took one of my cousins who just happened to be home from college. I'm like, "Look, you just got to come count. So you don't need to know anything else." So I remember we get to the warehouse. I had one of the guys, actually it was a friend of that guy that I made the first deal with, had $3 million all ready to wire once I gave him the okay for this. I was splitting the deal with him 50-50. I found the deal. He was financing it because I was still kind of new in this business. So we get there. It was supposed to be an easy, 24-hour inspection of the phones. We start opening boxes. Nothing's what it is. We open a box that's supposed to have a Nextel, which is probably another one you don't know, the old walkie-talkie phones. And it's got a StarTAC in it. We open a box that's supposed to have a Nokia. It's got a Motorola in it. So nothing was right. So basically, we spent 2 weeks in Largo, Maryland.
I don't even know where that is. That's something
no place you want to go. It might be better now, but we were in a warehouse there. And actually, I think T-Mobile bought the company eventually. Eventually, they bought them. But we spent what was supposed to be 24 hours. We spent 2 weeks there. Went through, I would say, we didn't go through all 30,000, but we came pretty close because we had all their workers helping us. And what was supposed to be a $3 million deal, we ended up buying for $800,000. I financed, I think, 6 of it. The other guy only had to finance like 200,000 of it. And I think we sold it for like 3x.
That's insane. So
mainly because they just wanted to get this deal closed. They needed the phones out of the warehouse. And we're like, "Guys, everything on the spreadsheet's wrong. Like everything, single thing that we're supposed to be buying is something different." Now, sometimes it's different for the better. So finally, they realized that we were going to say, "I was a kid, I didn't care. This was a huge deal. This was like the biggest deal of my life at that time." So I'm like,
how did you manage the emotions? Like, how did you handle the excitement, the nervousness? Or was you just fully focused and dialed in?
I was just fully focused and dialed in on that one. I mean, once we got down to a certain number and I knew I could sell a third of the phones or a quarter of the phones in a heartbeat and get my investment back, that was it. And I literally lived off that supply of phones because I wasn't that big of a wholesaler.
Yeah.
I lived off of that for probably a year and a half. And that one deal made my business.
Wow.
That was it because that was like the smorgasbord of phones. We had everything. We literally that deal had a little bit of everything in it. So we hit every international market, every local guy, we would supply all the stores.
Just trapping them left and right, like a rapper.
It was crazy. And we had one warehouse in Hicksville, and then I had to rent space from the guy next door to me. I'm like, I can't fit all this. And then he happened to be in a similar business. He was exporting servers. Believe it or not, that was like a huge business. He would export servers.
Yeah, that was a big business back in the day.
I don't know where he might have been sending them to Dubai. But he goes, "Look, he goes, if you want me to, I can sell some of these." And he started selling them. Then I ended up in Dubai. So I flew down to Dubai after we closed a few deals with Dubai and learned that industry. And you want to talk about something crazy and trustworthy? So they would leave millions of dollars. They'd have prayer time. A bell would just ring. And it would be like the cell phone district, all electronics. And they'd literally have these little shops, but they'd count all the freight. The freight forward would bring the freight to their little shop, which was literally like the size of a Dunkin' Donuts. And they'd be counting millions of dollars worth of phones right outside. But as soon as that bell rang for prayer time, they just left the phones out. No one was on the street. Everyone had to go in and pray for 45 minutes. And I asked the guy, I go, what would stop somebody from stealing all this stuff? He goes, they'll kill you or cut your hands off. He goes,
my
that's the way it was in Dubai back then.
That's true.
They take you out.
And you're a New Yorker, so back in if people were counting millions of dollars of phones on the street, they probably just grab them and run.
I was just shocked because we wouldn't leave cell phones out in the back. We'd have somebody sitting out there when I'd have truck phones coming in because they left the pallet outside. I didn't know if somebody's gonna have sticky fingers and steal a phone. Every phone back then was a few $100s.
Now,
and
were you trading this whole time?
I was always investing in trading.
Okay, so I do want to touch on what at the end of the business. I think I saw your LinkedIn. And you think you wound up selling it, right? And then I think you went full-time trading.
Yeah, well, I was trading pretty much full time while I had the business.
Really? So
not active, not like 24 hours like one now. Like I was just learning technicals. I'd buy Apple. I'd sell Apple. Probably the worst thing I ever did. I bought 2,000 shares of Apple at $90, pre-split. You wouldn't be talking to me now if I never sold those.
Yeah, you'd have a private island with Richard Branson.
Me and my brother together, because we had it in a business account. So we bought 2,000 shares of Apple. I'm usually a little more of the risk taker. He's a little less. He's like, let's just sell it. It went to 100. And I don't know. It was like 2 weeks. We just took it. We always say, if we just held that Apple. I don't know. I forgot what it was. I don't even want to know.
You don't want to know.
Just go back to Apple 2005. I don't know. You can figure it out because I remember the warehouse I was in. I remember. I'll never forget.
So trading has always been a part of your life, right?
Oh, yeah. I always manage my own accounts. Even
you never hired a financial advisor?
I actually did. They just
really?
There was so many fees, and they put you in so many garbage products. Eventually, I just did it myself.
How did you learn? Because you were like my go-to fundamentals guy when it comes to for example, the utility short. It's like, oh, they have foreign exchange exposure, right? And I'm like, how does he know that? So how did you just keep up, and where did you learn your knowledge from? Because I've referred a lot of people to you, and they're like, how does he know this stuff? I'm like, I couldn't tell you.
If I could give you guys the list of books, I probably read about 10 books, and you're not going to get it just from reading the books, but just talking to other people, people that have been trading longer. And if you learn one thing from them, like one mechanical trade, like that VIX trade we did the other day, remember I said we're going to buy it right at close if it hits this level, and it's just mechanically because of the way VIX is structured and because of that VIXX, it's a mechanical. It's going to open up higher, like it's going to have a settlement at 9:15. And what did we made whoever took the
300%.
Yeah, whoever took the 26 contracts made bigger money, but we made more percent on the 27. So same thing. But I just learned that recently from a futures trader that I'm friends with.
Now, how would you describe your trading style? Because I think I like to call it violently patient. Like you will wait all week for your setup. And I know a lot of us are like, Brian, what should we get into? And you're like, sure, you can take this, but I'm waiting for my setup. So how would you describe your trading style?
Because my trading style, I always like taking the butterflies. I like doing some of the complex option spreads, which really aren't that complex. But if you're going to do this, you have to wait for the right setup. Like if you're going to do this for a living, first thing I learned quickly when I did this, because don't worry, I blew up accounts when I became full time. So first off, none of you feel bad who's listening to this. I think I blew up 3 accounts. So,
did you feel sad?
It was money I had. I wasn't going all in YOLOing. It wasn't that kind of. It was it was more like trading with real money while learning.
Okay.
So
you never paper traded or anything like that? You probably paper trade new strategies.
They didn't even have. When I was trading, they didn't even have paper trading available. You couldn't do it online, So it was kind of like you literally had to write it down on a piece of paper and then kind of figure out where you might have gotten out or stopped out. It wasn't as easy as it was now, where you can go on Thinkorswim and actually paper trade like a real trader. I think that's a great idea. And then start with smaller amount of money to learn how to trade.
What would you recommend to someone if today's their first day trading in this market? What would you say to them, other than run as far as possible?
Learn first. Everyone wants to be a trader and jump right in and start trading. And I did the same thing. Nobody wants to learn. Learn and become a professional. It's just in one product. Trade the SPY. trade the ES and don't trade these weeklies. And the way I learned, it only existed with monthlies. You trade the monthlies, you trade the 50, 60 deltas, and you trade your setup. You trade your technical setup. I mean, you know me, I would say 80% technical, but in this world, you got to be 20% macro, like what's really going on. I'm not sitting there going through balance sheets, but I know the interrelationship between yields are rising, utilities have to be going down. So if they're going up, I mean, I think I posted that trade for everyone on Twitter, and I think I posted it with TradingView, but I mean, it just doesn't happen. The money managers there's rules that all these guys have that manage money. They have to lower their exposure because they got to buy bonds because that's their safety trade. So if you're getting a better yield in a treasury than a utility, they go with the treasury. So it made 0 sense.
How did you learn that? To me, that's mind blowing.
Like that kind of stuff, and the stuff that I'm constantly, talking about in the room and new things. And look, I'm learning program trading with you guys.
That's true.
We're doing that live. I'm learning level 3 with you guys. I didn't even know level 3 existed. I knew that there were definitely people getting better fills than all of us schmucks sitting behind our computers. I'm probably better than most people, but I didn't know this was all available.
So I guess it's almost like you're learning that all these funds, it's rigged, right? I think the first day you used level 3, you told us it was rigged.
When you could see what's going through, and when you could see them pushing the button, and you see somebody, and I'm just for all you that are listening, we're just talking about ES right now, ES futures. But when you see somebody saying they want to, like when the market was going down, you see somebody putting an offer to buy 3,000 contracts, and immediately one of the big firms comes in and puts 6,000 on sale. Well, it pushes the price down. He fills him. Now he's got another 3,000. So we knew they were unloading. I mean, we know almost all month. We watched them unload.
It's crazy to see. Now, do you own any long-term investments?
Oh yeah, I have a regular retirement fund. I trade it actively, but not like what we do. Like I have Apple that I don't touch. I might trim it sometimes if it gets a little extended or really crazy. I had a Home Depot for my whole life. I couldn't even tell you how long I've had a Home Depot for.
No, it's funny. A lot of I'm gonna call you an older guy. Don't get offended, but all my I call them OGs. Like the guys have been trading for 20 years. They all own Home Depot.
You got Home Depot, Apple. What else? You know what? Nvidia, I traded a lot. Even in my retirement, I traded in my IRA. I traded Nvidia a lot. So I never strictly just owned it. That was when I traded more so than owned. Chip wise, I went with the SMH. Sometimes it's just easier.
Yeah, I remember when I first started, I was always told don't trade ETFs, always go with the individual names when you're new. And I find sometimes trading ETF is just a better big picture view. Like you don't really have to worry about too much.
I think you could learn more. I mean, you see on screen, I'm constantly bringing up ETF.com.
Yeah,
you get to see what the major
holdings.
Yeah, you get to see the holdings. You see the percentage. So you look at, and I'm just using that as an example, and I don't have it in front of me, but okay, I like NVIDIA. I like AMD. I like whatever. I like AMAT. I like CLAC. I like Lam Research. They're all the top 10. So instead of me picking the one, well, they all have the same technical setup, and instead of me trying to pick the one that's going to blast off in the next 2 weeks, if the whole sector has the same setup, just take the ETF because it normally looks exactly the same chart. Are you going to pick the absolute winner and make the most off of it? No, but you're a lot safer. Because what happens that one time that you're deciding, okay, am I going to play, again, I'll keep telling you guys don't do weeklies, but am I going to play the weeklies on AMD, NVIDIA, or, I know what's another fun one. I'll just use those two as an example. Well, you pick
AMD's a good one, but I hate AMD.
You pick
AMD hates me too.
You pick AMD and then NVIDIA has the week and you're like, crap. Meanwhile, if you just took the SMH, yeah, you wouldn't have made your 100%, but you probably would have made 30 to 50%. And it doesn't matter. It doesn't matter if you picked the wrong one because the whole sector looked good.
So we were talking about trading ETFs. Now, something that comes to my attention is, why do you hate weeklies so much? What do you have against weeklies? How are you supposed to make those big home run gains to post on Twitter without trading weeklies?
Because that's not how you're going to make the real consistent money and have longevity in this game. If you want to be a full-time trader, I'll tell you who's making the money in weeklies. All the guys that are selling the premium, which you know me, we don't sell naked calls, nor can I sell naked calls. You need a major account to do that, but that's who's making the premium. Yes, you might hit the weekly that you might get the AMD or whatever weekly that works. Think about how much money's out there that doesn't work. It's like an insurance salesman.
So
It,
these big guys are almost like using these weeklies as like a premium farm, just raking in the retail money week after week after week.
week after week after week, and they get hit sometimes. I mean, that GameStop, and when they pulled that squeeze stuff, and some of these gamma squeezes, they got hit. They got hurt. Those guys got hurt. That's why all that shady stuff went on. And I never traded that, but I know how options work. They got their asses handed to them. I don't know if I'm allowed to say asses.
You're allowed to curse.
Okay, they got their asses handed to them. They were not prepared for that. I mean, that was the biggest setup of they couldn't get out of. They were ass backwards.
Yeah, they're just tripping over
They
themselves.
didn't
for
see
the
it
exit.
coming. I mean, they were used to just raking in the money weekly, and that's covered calls is a great strategy. I mean,
Yeah, I sell
no,
coverage, especially in this market too. If I have some positions they're still green because I bought them in 2019, so I just sell coverages on it. Just
that's
rake in some
actually.
premium.
You asked me about my investments. That's a big part of it is covered calls. It's just constantly
Really?
writing it, and I don't care if I get called away the stock because I'll just wait for a technical level to re-enter. I'm not selling a call weekly. I'm going like out 3 months, looking at a
Yeah,
3 month chart, trying to get a nice premium, saying, okay, if Apple hits this at that point with me taking in this premium, and I know what I'm going to risk on the trade. Let's say I'm risking $5 or $6 in Apple, but I can make 20 if they call it away from me. That's fine. If not, I'll just keep writing, and that works
good point.
great. You're going to need that in a market when the VIX goes back to I don't know sub 15.
Probably not gonna happen this year though.
Nah, there's something structurally screwed up with this market in many different aspects.
I'm curious your thoughts on the market. Let's say the last 6 months. So I know you mentor a lot of people too, and a lot of people come to you like asking for help. What have you seen with these newer traders that are COVID traders? Like, what's the biggest thing that they keep messing up that you just that like sticks in your brain? Like most, I guess, commonalities between them.
Well, a lot of them had a hard time the first part of 2022 because the market
Oh
was
yeah.
going down. Now, to be honest, I had a hard time in 2021 and 2020 because I've never seen a market go up like that. Never in my life. I've been through the financial crisis. I shorted that. I got out of stuff. I bought some banks when they were low just because Warren Buffett bought them, so I followed him. But I had a harder time trading when it constantly just went straight up because it just wasn't normal. Like no one saw that. Anyone older. No one that's been doing this for what I don't know 10 years. All they remember is when that happens. Eventually, straight down happens really fast.
That's true. They always say the more you go up, the harder you fall, right?
Yep. I mean, it was a lot harder for me to hold the position longer. That's why rolling was the best. I just kept rolling. I couldn't show those, I don't know, 5,000% gains because I would pick the right option. I would go out 30 days, but I would just keep rolling it because I didn't think it would keep going up. But that market went up for 2 years straight.
But that's good because you're always managing risk. And I think now, I guess I didn't ask, how long have you been quote unquote full time?
Like total full time?
Yeah, like full time, like trading's your
2018.
2018. Okay.
And to be
And
honest, 2000, I sold the company in 2015, but I had to stay on for 3 years. So kind of the
okay.
last year and a half, I really just sat in my office and traded.
So you were just like an advisory kind of role?
Yeah, I had to. You had to stay on. It's part of the deal
Yeah.
when you sell the company. So, but
So
I didn't know about any of these rooms or anything. The first one I actually paid for, which I couldn't believe how freaking expensive it was the Nigerians. It was called Investitude back then.
this
And
is a
they were,
Discord?
no, the option scanner. You know John Nigerian and Pete Nigerian on the halftime report? The
I feel like I
ponytail
don't.
twins?
I feel like I don't. I know the crypto twins.
Nah, these are the ponytail twins. So in 2017, I don't know how I found it. I guess an ad just popped up because that's when Google started their algorithms and saw I was on E-Trade all day. So it popped up. They were the first ones to actually have a retail unusual option scanner. They were the first to the game.
Okay.
They were the first
It's
to
like
the
an
game.
unusual whale stream type service.
Yeah,
Black box
it's
stocks.
called unusual options activity. It was like 800 a month back then.
Wow.
800 a month. But it was much more detailed. Like you can get ones, like these ones out there are good if you know how to read them afterwards. What theirs did was it would show you the real unusual ones, but it would also show you if it was attached to another part of the trade. So was there equity
Okay.
involved? Was there other parts? Doesn't mean the trade wasn't bullish or bearish. It would just show there's more to it than just the options that you might be seeing. So maybe
You
it's
were
a
very
covered
keen on
call.
that.
Maybe it was a stock replacement. So, and there was a chat involved, and they explain it. And then it was a very friendly group.
So
A
you've
lot
been
of our
mainly options your whole trading career?
No, I mainly did stocks. Mainly stock.
Okay.
Don't forget, I was trading stocks when they were trading in fractions.
Oh, man.
Quarter. I remember when they launched. I can't remember if they launched pennies right away or if they just changed it from fractions to 25 cents or 10 cents. But eventually it went to 1 cent. But back in the day, you had to know 1/8, 1/16, 1/2, all the fun fractions to know your pricing.
So you did trade. So did you trade like small caps and micro caps at all?
Oh no, never. Always big caps. I mean, some of them in 2000 turned into micro caps, but no, they were always big caps. Oracle. What else? ATM. Most of them got acquired. Any of the good ones from back then all got acquired. Like Atmel, I remember ATML we used to trade.
So why did you stay away from the small caps? Just are they scammy kind of or scummy management?
You know what? That was always the thing where somebody gave you a tip of an OTC pink sheet, and you'd buy it, and it would go up to whatever. I mean, back then you'd buy them for $1. It would go up to 5, and then you figured this thing's really going to go, and then it ended up being 0, like every time. It was always a tip, and then somebody said the best tip when you get a tip is not follow the tip.
It's so true. Yeah, I trade a lot of small caps, but definitely more so. I became I used to trade small caps, and then the more options I did, the more and more profitable I became, because small caps, especially with FinTwit. And I wanted to kind of touch on that. How did you find FinTwit? Like the whole
first, the better question
financial
is
Twitter.
How did I find Twitter? Because
Yeah,
I was back in the days when I was still on Friendster before Facebook.
yeah, Friendster, and then
You
did you
probably
just go on
know what that
iHub
is.
too? I know what Friendster is.
Oh, you do? I don't even know.
Yeah.
It probably doesn't exist. But I found Twitter. I remember I was watching the news, and I was a big fan of, what was it, 2.5 Men. I guess Charlie Sheen was going ballistic on Twitter, was having some kind of rant. I don't remember what it was. I signed up for Twitter that day to see what he was saying. And then I just started searching around, and I found people talking about stocks, and that's how I found, I guess, their algorithm was going. And the more I searched and was reading articles on stocks, it would pop up. And I never even knew this Discord kind of stuff even existed. And then basically, I was trading I was just trading by myself in my office. So I'm like, okay, it's kind of boring. Like you're sitting there and staring at a chart totally by yourself. I was in that group with the Nigerians, the unusual options activity, but it was kind of more people just looking at the scans. And if you had a question, the moderator in the room who was a professional options trader, would explain the trade to you. It was kind of that stuff because they were the first scanner that came out. So then I just signed up for one that was, I don't remember what it was. I think it was $200 a month. And it was fun. It was a lot of people talking and sharing ideas.
That's all she wrote.
Yeah. And from there, it had live, and then I realized, I won't say the name, but the guy was totally shady. And he would do big caps, which I did. But I could tell on options, he was front running options, and he was doing micro caps, which I never traded, or at least small caps. And he was definitely front running that.
Yeah, so he was doing those. We call them the low volume, low OI option pumpers. Some of those guys that like they alert plays that are like 0.2 on the ask, and it's $30 out the money and expires in 6 hours, and they go crazy.
I mainly just watched in the first one I belonged to, and I chatted with a few. I became friendly with a few people that are actually probably in my room now. But I noticed a few times just from being a trader, it's like this guy would call out a trade or alert a trade. And I'm like, okay, there's 200 contracts there that were bought. He obviously bought them. There's no liquidity or no open interest. I guarantee you, as he alerts this and everyone buys, he's selling all this. Like I knew that there was no sense to buy that option. It wasn't a low float. It would be like just a random Home Depot option that had no liquidity. So I figured out the game he was playing, and then I just exited there. I'm like, this is just ridiculous.
Now, how did you make the journey to start your own room? Because your room, I think, is a little bit different. I think a lot of people, when they join a room, like they want alerts and like fast money. And I think your room is not for that kind of individual. And you're pretty blatant about saying that. So how did you kind of transition into creating your own room in your own community?
Well, actually, so after I left that room, I guess there were a bunch of people that left and started they started their own community, and I was a
Okay.
teacher slash moderator there, and I would help out a lot of people because I was a moderator. So they were constantly asking me questions. The
Yep.
room got really big. It was a pretty expensive paid subscription room, but the one common thing that everyone was having a problem with, there was just so many alerts. Like
Yeah.
it was alert crazy, and you'd see an alert 5 minutes later, you'd buy this guy's alert, which he was good, but by the time you bought the alert, 2 seconds later he was getting out of it, and you weren't making money.
Yep.
He's
Oh,
made
I
his
know a
50,
lot of rooms like
100%, and
that.
it wasn't necessarily that he wasn't doing anything wrong. It was just too much.
Yeah, it's almost information overload, right? I think the point of joining a paid room is almost to add value to your trading and learn something new. But we call them alert farms, right? Like I'm in some now where like they're muted because it's just every 5 seconds it's like I'm going long, now I'm short, long, short. I'm like I can't pay attention.
Yeah, well, if you noticed, I alert less and less and less, but I'll teach more and more and give you more resources to learn to trade because I don't want the trader that comes to the alert late or we sell and then he's always the one that lost. He takes the wrong
Yep.
alert. I always call it like this, where I came from, they were doing 20 alerts and I think they do 40 nowadays. And it's like
That's
that guy
insane.
that can only do three, only buys three, happens to buy the bad three.
Yep, of course. That's how it always works. And then it's kind of like a cycle.
Or they come into the room, we're all in the trade already because we've been there since 9:30. They come in at 11. They see everyone, oh, I'm up this, I'm up that. Then they get in the trade. Then we all exit and they lose. I'm like, it's more important that they learn how to trade on their own. And you're not going to learn discipline just following alerts.
No, you're not gonna. How would you, if someone was to ask you how to learn discipline? Like I remember, I think we had a conversation. What was it, last Friday? And I was just getting chopped up, and you're like, "Yeah, just take 5 days off." And I'm like, "Okay." So I didn't trade. I was just kind of, I did play a few setups. I did. I think I sent you a screenshot where I hit like a 200%er.
Yeah, you didn't totally listen. When I say take days off, don't even look at the screens. It's actually good.
Oh, I felt more refreshed. I mean, because I was making like 5% here, then losing 2%. Like I was still green-ish. Like that one trade put me back into green for May, but like I was just getting chopped up, and I took a couple of days of not fully focused on it, and man, I felt good. I felt real good.
Well,
I came back today, 2 plays, and I was done.
Yeah, especially in this market where you could see the range of the moves. But when you're in there, I don't know, what do we do? 30 days straight staring at charts with these ridiculous up move, down move. Am I going up? Am I going down? Sometimes even you have a good month, take the last week off. Clear your head. You'll see the charts better.
What was the monthly close on SPY? It was like 25 cents or something like that.
I think 90. I went for the month. I think it was 90 cents.
That's insane. And like tomorrow we could have like a huge range, and it won't be anything. It'll just be choppy.
I got an 84-point range in the ES over the next 24 hours until tomorrow's close at 5.
How do you calculate that kind of stuff? Because I know you post your standard deviations on Twitter. Like, how did you kind of come up with that system? Because I think that's really unique, and I find it really, really helpful just to kind of see where we are on the day and give me a gauge. So how did you like kind of come up with it, or how did you learn it?
I'm not a genius. If you read the books, standard deviations is one of the first things you'll learn about trading options, because there's a certain option you can take. If you want to say, I want to hold it for say you want to hold Tesla for 3 weeks, now that there's weeklies, right? So you could use, say, I think Tesla's going to go 3 standard deviations. That'll tell you what option to buy.
Ah, okay. So it's nothing.
I actually built a
calculator.
You guys haven't seen it yet because my web guy's still working on it. But I actually built a calculator where you guys are going to be able to input any stock you want. You're going to have to do a little work. You're going to have to put the actual price, because I'm not paying for a data feed. And you're going to have to know how to look up the implied volatility. And it will tell you 3 standard deviations up, 3 standard deviations down, just like I give you guys for the market daily. But not only that, it'll tell you 1 week out. You could do whatever you want. I could build it as far as you guys want. You could do a year out. A deviation's a deviation.
Now, is that what the algos are following?
They're all programmed to the same deviation. So that was kind of finding out from somebody how they're programmed, what they're looking at. Also, this low volume and being able to see they're accumulating to flip the trade, right? And we're not
Okay.
talking about the ones during the day I'm calling out. Like most of their accumulation is during the night or dumping.
Really? So that's when they're
Yeah,
they're they're buying their contracts and stuff like that.
and then you remember when I show you on the 5 minute chart them stop which way they're going to stop out, and then they just
Yep.
they run all those stops overnight. Those people are probably all who bought them overnight.
I do want to touch on futures.
I started with the futures basically to hedge overnight.
So hedge your long positions or your short position overnight?
Yep, exactly. So I wasn't even looking for futures to make money. I wasn't using it for a trading vehicle. I was using it for basically a delta hedge overnight.
Very interesting.
If I had some decent size on,
Yeah, I know a lot of prop funds do that, right? Isn't that how they hedge it overnight?
Oh yeah, 100%. They hedge it with futures. It's the only way you can hedge.
And then just kind of went crazy from there. You kind of, because it seems like you really, really enjoy the futures. And I think for a lot of people trading, I think futures are great because there's no PDT, right?
There's no PDT. There's major tax benefits, and
taxes are great.
they're they're actually not liquid now. Like I see guys coming in on low liquidity days, just a regular guy trading 300 contracts. He'll move the market 2 points, 1.75 ticks.
Just off one order because everyone's on vacation, like this market's
Yeah,
going to
because
zero.
the volume was so low, a lot of people got scared out. I mean, not that they were trading futures, but realize all these SPY options they all come back and revert back to futures, SPX futures. Like when I call out in the room, there was just a huge SPX sweep, and they're gonna have to hedge. The market maker has to be neutral. He just makes his little piece. He's got to be fully hedged. He's using the futures.
Can you explain delta hedging to someone who may not know what it is? Because I look at like they call them the GEX values, right? The GEX values of just kind of if they're negative, like what if they buy stock in order to become delta neutral. Could you explain it in really simple terms? Because I think a lot of people don't really understand how it works.
So every time somebody buys a put, and just say, I don't know, 10 puts on SPX, the market maker has to go out. He doesn't want exposure to that. He's just the middleman. He makes his little piece on the actual transaction. He's got to go out and short the ES against that SPX. So they all make a big deal about the JP Morgan collar that we all know expires every quarter. That's, 66,000 contracts this June, I think.
Total or each side?
Each side. No,
Ooh,
he did.
Okay.
Well, were you in the room when they rolled their when I saw them roll? So they do a monthly. They do a monthly and a quarterly. It depends on which. I guess they have different funds. Their big one is the quarterly. I think it's 44.66. It's all about what their exposure is. But their monthly, they just rolled. It was 60,
so what is the
6,700.
JPM collar? Is this are they just hedging their funds?
Yeah, they're hedging a major fund. They made a major position, market position. So you can figure out your basically SPY beta weighting. Almost any broker has it. Put all your stocks in, and it tells you how many deltas against the SPX or SPY. And you can kind of hedge your whole portfolio just using that product.
How would you describe delta to someone as well? I try to keep it really simple because for people that are newer might not know. Okay. So what is delta?
So delta option wise, let's say you guys if you're trading options, you guys all should be looking at this. It's for every dollar. So you have a delta 60. If the stock moves a dollar and the option has a delta 60, the option will move 60 cents. Hypothetically, if it was a straight 1-to-1. Now, of course,
okay,
this will get you into gamma because as delta goes up, you know how delta rises? So you start off with what you guys call a YOLO, a lotto, and you probably don't even look, but it's probably got a delta of 20 or 25. But when you guys sell them for 300%, it's probably got a 50 or 60 delta. Well, something moved that delta from 25 to 60. That's gamma. It's the delta of delta. As confusing as that is.
No, it definitely makes sense. But you are not a fan of buying straight calls and puts.
Not in this market. I like doing this. I mean, look, the smartest and richest people that do this, and we're talking about funds, there's one thing I learned. They're always selling premium, no matter what they do. And I know some huge traders. They are always selling premium.
So they're never buying naked calls and puts?
Only if they're hedging their portfolio. Only if it's a hedge will they go naked.
So why do you think they're taking the premium? Just risk?
Well, even on a lotto, let's say you buy something for, I don't know, 60 cents, but you could sell 20 cents worth of premium, right? So now it only costs you 40 cents. Now you could buy, there's two things you can do. You have less exposure, you could buy more.
Yeah, simple enough.
I mean, it's basically, and you know what, they're using deviations. So they're using where can the stock go. That's how they decide what premium to sell. So there's a lot of guys that'll sell, like, again, we can't do this. These are big firms, but these big funds, hedge funds, they're selling us, who do you think's selling us these SPX weeklies? Dailies.
Probably probably the hedge funds.
SPX trades daily every day. Who do you think's selling it and taking in all that premium? And we talk about premium burn, and we look when a Friday has a huge level of exposure and where max pain is. They sold them to us. Now, sometimes you don't think it's ironic sometimes how, I don't know, there's 60,000 4100s out there, and we get within $2 in it, within a $2 close of the SPX there, yet we were like $80 away in the morning.
Super strange, right?
Regardless if it was better for us and it was the right trade and we made a ton off it or not, the market makers get their way. But it also helps,
Now,
when you see what's out there. Again, it's the same thing. There's hedging going on with all these contracts now. So let's say somebody's got 4,100 puts because the market's been going down, and now the market keeps going up and up and up. Well, this is all computerized now, but every time the market hits a certain level of exposure of that delta, what are they doing? They're covering their short ESs. So that's like sometimes when we know the market's going to squeeze and certain things are going to happen, it's because the market makers have to do it. It has nothing to do with where the price action should actually go. There's just so much of something out there that is so far out of the money, it causes forced covering. They don't need it. They don't need the hedge on anymore, because otherwise they won't be neutral. They'll actually have a position on.
So that's similar to what we're seeing right now, right? People always talk about how the volume's so low and like how we're still ripping up. But in reality, it's just because everyone that bought all those puts from the bloodbath we had the last couple of days and weeks, now they're just covering their shorts up. And it's just algorithms. It's not someone behind a computer pushing buttons.
Oh yeah, it's not manual. This is all automated with the amount of transactions that goes on now. And it's not, they're not doing it every second. I think there's certain levels where, okay, we could take off X amount. There's other factors also, time decay, right? So getting closer to the strike price. We don't need 10,000 short ESs. I remember that last week. I don't know if you were on that day, but somebody bought a huge load of puts. And
on the ES, right?
And on the level 3, I saw somebody short at the exact same time. Goldman Sachs shorted 10,000 futures. Now, remember I told the whole room, they didn't go short. They're just clearing that trade because it was the exact same time.
Just mopping it up, right?
Well, no, they had to get they probably wrote it or cleared the trade, but they had to get the actual guy that sold the premium neutral, right? He's not in a position. He just wants that premium sell. So the market maker had to be neutral.
Do you think algos are bad or good for the market? You've been in the markets for, let's say, 20 plus years, and you've seen kind of the evolution of computerization and digitalization and algos and everything. Do you think algos are good or bad?
Well, right now I'm very interested in reading up about them constantly now.
So yeah, you're kind of obsessed.
I kind of enjoy it. It's definitely made the game a lot faster.
Really?
I mean, you see these bull traps, bear traps all day long.
Oh yeah.
You think it's going to go one direction. It's not humans playing that game. I'm calling out the SPY sweeps that are coming through. I'm not talking about SPY options. I'm talking about huge blocks.
Yeah, like dark pools almost, right?
Yeah, like live dark pools that are coming through. So it's the algorithms. That's not a human doing that. And they know where they're accumulating. And I think I read there's 231 of them.
231 algorithms?
Different algorithms, yeah. Now, some firms will have 6, some firms 7, but there's I think if the top algorithms, it's 231 that are trading.
That's insane. And they're all trying to screw each other, right?
You got some that only trade the European time, some that only trade Asia time, some that are literally scalping algorithms. So there's all different types, but there's 231. I'm sure there's more because I always see people trying to build quants, and there's always stuff out there. they're looking for quants to build algorithms for them. So everyone's trying to top up the next guy. But I think they said there's 231 active algos.
And that's on big boards too, right? Or just
Right.
futures?
That's all big board. All futures. They're not using it. They're not using an algorithm on Apple or anything like that. I mean, I guess they technically could, but it's all
Now,
futures. It's quick
so
money.
it's quick money, and it's all and you lose sleep over it every night. It's great. I was kidding. Do you think? This is a good question. I love to ask people. Do you think these algos are using technicals?
100% they are. That 1,000% they are. Some of them are programmed to trade simply, I don't know, the 21 to the 50, or trade off the 8, trade down to the 21. You don't find it when you're staring at the chart suspicious that we stop right on the 21 and that's where we bounce, because that's their exit or that's their cover if it's
Now,
short.
what is a 21? Because from my understanding, a 21. You're talking about the 21 EMA, right?
21 EMA, yes.
And that's considered the mean, right?
Yep, that's basically reversion to the mean. In the simplest form, there's usually 21 to 23 trading days in a month, so 21 is reversion to the mean. You figure you should revert to the mean at least once a month. Now, we haven't been doing that, but
Yeah.
at
'Cause I
least
remember
once a month.
You're the one that, because you use like from my understanding of your trading strategy, you use almost like a Fibonacci sequence of EMAs.
Yeah, I took some out because it got to be too many.
Yeah.
But you could
a little
literally
crazy.
use, the strongest trend, riding the 5-8 up or down. Don't
Yep.
go, even if you don't want to trade it, don't trade against it. And that's what I was telling a lot of guys in the room that wanted to go short. I forgot what day, because now you're mentally programmed short because the market just kicked everyone's ass.
I think that
So
was Wednesday or Thursday, because I was like, oh, we have a wedge building here at the top, RSI divergence, everything like that, and then boom, another spike. I'm like, oh, here we go again.
simplest trick, and I'm gonna actually do a free YouTube on it. But the simplest trick is if it's riding the 5-8, don't go against the pattern. Even if you don't want to go with it, just don't go against it.
And now, would that be consistent candles that close above and below? Right?
Yeah, closing above it. I mean, if you get,
Okay.
let's say you close on a 5-minute, I don't know, a little bit below the 8, what's going to happen as they're riding the 5-8 up? They're going to get closer and closer. So another trick you can do is throw in the 13, which is one of the Fibonacci EMAs. 5, 8, 13, 21, 34, 50, you can go all the way down the ladder. You don't need them all. That is a trick, that when the 5 and 8 are basically touching each other, if you want to know if you're long and already in the position, it's riding the 5-8 up. And if you want to still give it room because there's still room to go up, you'd use the 13 as your stop. So a 5-minute close below the 13, I'd be out.
But you don't trade on the 5-minute, right?
With futures, I'll look at it. I always have the hourly up.
Yeah, you're much more of a big picture time frame person. And why is that?
Because if you're scalping, and we got a lot of guys that scalp in the room, think about it. This market's moving so fast. Now, you can get 10 points out of it, but if you're risking, there was a trader today that was 25 backwards. It worked out in the end, but I don't know why. 25 to 25, you ain't going to win that way.
Yeah, you always talk about that, the risk reward.
Risking 25 to make 25. I
That's losing long term, right? Or is it breaking even?
Your odds are horrible. Some guys do good, but I watch these other guys, futures traders, and it's Chatham, just all old guys that one of my friends got me in because he's at a big firm, and they're scalping all day. But they give themselves, I think, 1.25 point, 1.25 ticks. So a point and a tick. If it goes against them, they're out. They need the direction right away, and then they're taking 5 points, 6 points, 8 points, and they'll leave a runner or
That's
two.
correct. I don't have the mental capacity. I feel like the mental capacity would just burn me out.
You know what? I got to be honest, most of them are like 60 years old, these guys. They've been doing it. They're all ex-CME traders from the floor. So they were just programmed to trade this way. But I watch them get chopped out all day, I tell you guys.
Yeah.
But then I watch this one guy that's very patient on his entries and exit. And he's always using the hourly. So, he'll enter off the 5 or the 15. He trades off the hourly. That's it. He's not looking for the 1.25 points. He's looking for the 150-point move.
That's interesting. Yeah, you do talk about the scalpers. That's funny. They're all 60 years old, just trading futures from their mansions, right?
Yep. Yep. But this one guy, literally, he makes maybe 8 trades a month. He made one trade in May.
One trade?
He sets up. He sends me a lot of like when I'm talking about the analogs,
Yeah.
like what should or could be the setup for tomorrow. He sends me all the analogs.
What are analogs? Because I've mentioned them to friends as well. They're like, "What the fuck is an analog?" I'm like,
Okay,
my
so
boy Brian.
an analog so an algorithm is programmed. It's programmed to find the repetitive pattern that a human being's going to do. So what it looks for is it's called an analog. It's basically what day is this tracking? What is the algo tracking? It didn't just pick up. It didn't just decide what it's going to do out of thin air. It's tracking a certain date and time. So this guy that sends them to me, he used to work and manage a hedge fund, so he has access to the computer still and gets them. I can never get these like myself. You could do the research. Like I'm slowly
Yeah.
learning how to. You can manually do it, but it's a lot easier if you have a computer system figuring out 8 possibilities of what the algorithm will do than sitting
So
there
it's
searching.
comparing current data to historic data.
Exactly. So like right now we're looking at from a bigger picture, not day trading, from bigger picture. We're looking at obviously models from 2008, 2001, quantitative tightening in 2018, 19, around there. And there's a lot of correlations. And then you have the doomsday guys that think we're in 1987, which I was playing with G.I. Joe figures then, so I don't even know anything about Black Monday, but they all talk about it.
Me and my buddies say we message each other every night. It's like, hey man, tomorrow's gonna be Black Wednesday. We're going to zero. But unfortunately, it's never that easy. So what are your long-term outlooks on the market, at least for 2022? Because I think that your read has been pretty spot on. So I'm curious what you think is going to happen in 2022. Like, do you think Jay Powell is going to pause raising rates when the market crashes after the midterms, or
they're going to totally screw this up somehow?
You really think so?
Yeah, you know me. I think with 3,400, how and when? I mean, we have to watch some signals, but they'll probably get it up to 43 something. You know my outlook for June. I'm thinking that OPEX week in June, it lines up perfectly for them to make a temporary high, chop it around in July, and then kill it in August so they can get off the pedal right before the midterms. And that's the macro part you have to know. Like, how is this going to play out? Why?
So what would you look at in order to come up with a thesis like that? Like, oil is definitely one indicator, right? Because in 2008, oil went absolutely nutty, and everyone points to, when oil goes up, it's leading signs to the R word for recession.
I was going to say, probably you'll get the market rise with oil coming in just because it's a little extended and it'll come in. Then you'll get the oil to come in again, but that'll be because of recessions, which is going to use energy. Now, I've never seen gas this crazy. And my mom would tell me about when they used to have to go every other day in the 70s because...
Yeah, my grandfather owned a gas station. It's funny. I asked him about it. He's like, yeah, that was all bullshit. I'm like, what do you mean? He's like, they had plenty of oil. They were just trying to scheme some couple dollars from the middle class. That's what he told me. My grandfather's been investing for, I don't even know, like 40 years. So he reads Wall Street Journal. He's very in tune. But yeah, he's like, yeah, all the oil stuff is all nonsense. Just an excuse to make some money for the oil barons in Texas.
I think we're in a commodities super cycle. It's going to back down a bit because if you look at any of the commodities charts, they went berserk. They'll probably do it all at once, and then they'll start throwing the recession word. And once they're totally convinced that we're in a recession, that's when you start buying because we're basically out of it. It means we've been in one.
Yeah, I feel like
look anytime you've been in one, and when they start talking about it on TV and all that stuff, that's when you're coming out of it.
That's so funny how it works like
Doesn't mean you're going to go right up, but you could chop around for a while, and you're probably done with the big downswings.
So that's when you start accumulating, right, for the next leg?
Yep. You usually have a year of chop. And it's not chop like when we're talking about daily chop, but, probably in this market, because of how high we are, you'll go up 300, then you'll come in 200, then you'll go up 300, then you'll come in 150, something like that. And maybe a down month they'll throw in there.
Makes sense. I could definitely see it. I do agree with your 340 thesis on SPY. I definitely think they're gonna rip it up a little bit. But
you get to that. I believe that's my 30%. I'm looking for. I think the Fed puts at 30%. But if they screw up inflation, it's worse. So 30% off the all-time highs. So 4,800. What are you looking at? 1,500 down, right? Roughly.
Yep.
So
That checks out.
3,400. And what do you call it hedged today? What was the collar that JP Morgan did today? You know?
3,400. Wasn't 35, 5?
Well, they use an exact delta, but the side was 3,905, and they sold the 3,300s for August. I don't think it's happening, but nobody knows when this rug. Put it this way, for all you newer traders, the market's not supposed to move like this. You're not supposed to move. I don't know. What was it? We were moving like 4% a day sometimes in swings. That's not normal.
So you think something is probably fundamentally wrong. We just don't know what yet. Or what they're going to blame it on.
Something is broken. Something's broken. And like I'm reading what other people are saying, they'll break and then they'll fix it by throwing more money at it and cause the problem. Yeah. I've been reading a lot of articles and stuff that we've been broken since the last quantitative easing after the financial crisis. They've never fixed that issue.
It's funny you say that. I was about to say, do you think QE is the crack of the market that's just going to keep causing this until something's done?
I think it's going to be a repetitive cycle until they figure something out.
Until they come with some new idea, right?
And, like I said, again, the speed of all this stuff going on, it's just amplifying it. And all the new traders and all the new products available. And ETFs are a problem. I read a huge article. Who's the biggest owner of how many shares of Apple are in ETFs? How many different ETFs on Apple?
Every single one.
Yeah.
I mean, SPY's like 20% Apple. Like, it's something ridiculous.
So every time, just think about it fundamentally on their rebalance. Every time somebody sells XLK, SPY, all this stuff, they always have to rebalance at some point. You have to read when their rebalancing is. Is it monthly, quarterly? But I mean, just something like that alone. Look at Cathie Wood with redemptions. She was forced selling. She wasn't selling Tesla because she wanted to.
What do you think about Cathie Wood?
I mean, I don't love those stocks.
You don't want to own DraftKings?
I think I'm mad at myself because I thought that was the best hedge to take, like just short that thing for 2022. And I did it a few times, but I didn't stay in for the home run.
For the Grand Slam, Cathie Wood's name,
She had the 2000 .com bubble playbook. That was her portfolio. I mean, these ridiculously high PE ratio stocks that they decide a different day what the metrics is. Is it users? Is it how many times a click? Never profit because they don't make money.
It's insane the look at Cathie Wood. I do have some follow-up questions before we wrap up. If a new person came into market today, I asked this, but I want a little more detail. I want to dive into a little more. What would you tell them? Right? They just graduated, let's say college, and they want to be a trader. What do you think has made you successful compared to other people? Because you always hear 90% fail, and you've been doing this for 20 years. What do you think separates you from everyone else?
Oh, I failed. Don't worry. Like I said, I've had my failures. I'd say the biggest thing that would help me is first, do you enjoy charting? Are you going to be a technical investor? Because if you are, read the technical book by Jack Schwager. I forgot what it's called, Jack D. Schwager. Just Google that name with technical analysis. Kind of boring. It's literally got
cut and dry, right?
Yeah, it's cut and dry. It's old charts from that'll show you literally he's got examples of, you might not even know what this is, Pan Am Airlines, which I think went out of business 20 or 30 years ago, as a chart in there. But that was actually the first book I bought. I was actually I was really getting into technicals, and we were snowed in a hockey tournament somewhere in York, Pennsylvania, with my son, who was 6 at the time. And he needed something, and there was a Dick's, and next door was a bookstore, and he could get something. So I saw that book, and I just read it. I literally read it from cover to cover. Now, my second thing would tell you is pick a part of technical analysis you like. Because if you're going to try, I've seen people flip from, I'm going to trade EMAs or SMAs to Fibonacci, Carter's squeeze to, one knows what the next, I'm going to trade off the GAN fans, I literally used to watch a guy on YouTube that would trade off of every single method available on Thinkorswim. I forgot his name. Nice guy. I don't think he doesn't do YouTube, and he's not on Twitter anymore. But he literally used to trade SPY, and his reason for taking the trade one day was Fibonacci, one day was I don't even know what a GAN fan is. To be honest, I never studied that section.
I don't even know what it is either.
Used every tool available on Thinkorswim. his charts would be that they'd use the pitchfork, everything. Well, we're coming up to pitchfork 3. I mean, I think Fibonacci is a great basis, and I'm still studying that more and more and more. I think you need to know your EMAs. Fibonacci and EMAs correlate with each other. And currently, just because I'm still studying for my CMT, Elliott wave, which you need Fibonacci's.
I forgot you were studying your CMT. Just real quick, CMT is a
Chartered Master Technician. It takes 3, well, if you have the time to take each test, it's only available every 6 months. It takes 3 years. It's going to take
you passed your first one, right? You took it?
Passed my first one and my second one. Third
nice.
one.
Nice. Very well done.
Third one, there's no, I just haven't had time with the kids to get through all this stuff. I'm still reading Elliott wave over and over and over.
No, that was definitely.
It is interesting. Actually, if somebody really wants to learn the full thing, buy those textbooks for $200. They're worth it. Even if you skip a bunch of chapters, no one's going to teach you the right way like that. And they're more updated than they're much more updated than the book I just told everyone, the Jack Schwager book on technical analysis.
So
like, they'll use real examples that like an Apple from like 3 years ago chart.
I remember one of my buddies told me his dad traded penny stocks back in the 80s, and they would send a little booklet, and he would sit there with his ruler and draw out lines, and that's how he used to pick his penny stocks he would buy. Way back in the day.
Oh, I know someone you guys should all follow on Twitter. I think she used to work. I know this is a bad name to say right now. She used to work for KramerTheStreet.com. Helen Miser. Helene, I follow her. She's just great, and she'll show you. She's still, I hope she's not listening, but I think she's like in her 60s, but she still uses paper charts.
Really? That's crazy.
Protractors, everything, but she's she's old school textbook technical analysis. But if you want a good Saturday, just flip through charts for free. I think she has what she calls Charge Fest, and she runs a poll every Saturday which way everyone thinks the next 100 points are going to be. And this was the first week they set up, so let's see if they're right. Her name, it's Helene, Meisler, and she's good.
Awesome. It definitely sounds like if you want to be a trader, you got to be all in, or you're just not going to make it.
I would say
you got to love it.
You know, dabble and read a little bit of everything you like. First decide, I don't know if fundamental trading even exists anymore. You're really going to go through balance sheets and find either, I guess maybe if you want to be a short guy and find fraud in a company, but I don't even think that balance sheets matters. I mean, heavy cash companies, you know who they are. Apple could buy half these companies. Apple could probably fund the government. I mean, you should learn about P ratios because we might be in a P ratio reset where, right, if P ratios comes down, the stocks are coming down. If Apple doesn't deserve, and what's its P now? It's
probably something ridiculous. It's like Tesla's like 147 or something like that.
Even that came in, but like all those ones that went ridiculous. What do I got? Finviz up to the. Let me see what I can get. I'll do it. Apple's not that bad, and that's why you always hear them talk about growth. How much of their business, non-hardware business, is being factored into the PAE, and they come into all these different metrics.
I feel like Apple doesn't really have much room to grow. I don't know. That's the way I look at it. I feel like it's kind of already.
Their forward is 22.68, and their current is 24. So the best thing to do is something like Apple, because I don't know the history of their PE. I just technically, there's going to be a reset. You go to what is it? TradingView lets you do P ratio. You could do a chart on the P ratio history, so you can check out what was the historical average PE. Were they usually a 16? They're 24 now. Do they deserve to be an 18? I think, what do they have the market at now? They have the market at, I forgot what they have the SPY at, the P ratio. Well, depends who you ask. Some people have it at a 5,000 price point, and some people have it at I've seen a guy call for 2,000 and something.
That's insane. There's so much that goes into the market that I feel like people kind of get lost. It's like there's so much going on at all times, but I think you summed it up really well. Kind of pick your niche and become a master at it, and then once you master it, move on to something else
and learn. It'll bring you into something else. Start easy. Start with simple moving
5-8
simple EMAs and simple moving averages. Take a look, guys. Look at the 50-day, the 21, 50-day simple, the 100-day, the 200-day. I mean, you'll learn all these things. There's certain firms that a lot of firms, if it's under the 10 week SMA, they won't invest in the stock. They'll trade it, but they're not allowed to invest in it. I mean, every major firm's using technical. Use the 21.
You really think so? Everyone?
I mean, not the guys that go on CNBC. There's technical parts of every firm. They all have chart analysts at every firm now. But obviously, the guys that go on CNBC and tell you about their PE ratios and this and that, and this can be that part of the business, they're just, I don't know, they're just talking about it. I think they get back to the charts all the time. There's all these guys that have been on there for, I don't know, 15 years. Now they all know moving averages. They never talk about moving averages in their life. They talk about Ford's making the new Mustang and it's going to probably sell this, and their revenue and sales and like actual balance sheet stuff they talk about. And now we expect Ford to do X amount of Mustang sales, which will increase their revenue and their EBITDA with a 14 PE, and it's worth $60. I'm just giving you an example.
Yeah.
Now you hear them talking about a trend line and relative strength, which we could do a whole nother thing on relative strength. That's an important one.
Awesome. And then lastly, before we sum it up, if anyone wants to get in contact with you, what are your social medias and stuff like that, just so people can find you if they have any more questions?
On Twitter, it's Breaking Options, and then you can always email me, Tepdon, that's TEPDON, at breakingoptions.com. And I'll always answer questions and help. I'm always here to help, basically.
Yeah. You're one of the nicer people on Twitter. I haven't seen you in too many Twitter beefs.
I think maybe one with one guy once. I don't even know what it was about.
Yeah, I think there was literally one time.
It was probably like 12 o'clock at night, and I was just pissed off. I'm like, what is this guy saying? But you might not always like my answer if you DM me or ask me a question. But I had one guy the other day that, I don't know, I don't even know who he is. He DM'd me on Twitter. He was short. I go, it's long. And I told him, I asked him, I'll actually reverse question you. I said, why did you go short? And eventually we got into it. It was just a gut feeling.
Yeah, that's not going to work.
Gut. Eventually I pulled it out of him. And then I said, do you know EMAs? He goes, yeah. I said, could you pull up the 5/8 EMA? He said, yeah. I said, what do you see? And he said, it's going straight up the 5 EMA and hasn't cracked it once in I don't know how many hours. I said, so let's lose the gut.
Yeah. No, I appreciate your general, I don't want to say brutal honesty, but you're much more of a realist, right? If people ask you, you'll tell them what you see. And I kind of take that as well when people DM me. I'm like, hey, man, like, why'd you buy all these puts? It's like, because we're too high. I'm like, well, we can always go higher. Like, there's nothing telling us we can't.
Exactly. If there's one thing you should have learned, you can always go higher. And
always. And much lower.
if you can't figure out the trend, well, the trend right now is down. Just do a simple line. It doesn't have to be the perfect trend line, guys. You'll know if the line's going up, the stock's looking good. If the line's curved down, it's looking bad. It's
so simple.
Simplest way to do it. Because a lot of people, I see the people thinking that this might be the reverse. If we get over this level, we're back in a bull market. No, we're not. We're not. Wait for the trend to change. Wait to see how Powell navigates the situation.
Probably not going to go very well.
No.
Yeah, he's like, it's going to be Volcker 2.0. That's my thought.
I'm waiting to see. I mean, they're talking. That's the only. You know what? I mean, now we'll get into macro, but I don't know. A lot of these things are out of control. It's out of their control. Like raising rates isn't gonna help the shortage of wheat, right, or corn or bad crops. But you can raise rates as high as you want. If the shit ain't growing, you can raise it up. You could charge 50% interest rate. It doesn't matter. Corn ain't growing.
But you don't understand, if Powell raises rates, dude, everyone's gonna have corn.
I mean, the whole concept is to slow down consumption, but you're gonna eat and you're gonna use energy, and those are the two biggest things.
So those are your go-to things that you're gonna be tracking all of 2022.
Basically, I mean, he'll probably be able to slow down the other stuff. The general consumption of like the extra TVs, stuff you'd buy at Best Buy, the extra car, the extra vacation. Yeah, they can raise rates and make it tighter. I mean, they already said consumer credit cards, people's credit card balances like doubled recently.
Yeah,
and savings went down a ton in their savings account with the JP Morgan report. So I mean, that he could fight inflation with that, but it ain't going to help us at the banks or the supermarket.
No, we're still getting 0.01% in our savings account. So.
Yep, and he can't reopen China if they decide to close or not get stuff to us. I mean, it's going to take their production a while to get that back up.
Oh, it's going to take forever.
So that's what I'm looking at, and pleasure.
Just wake up day to day.
Yeah,
just see what's in front
honestly,
of you.
that's some of the easiest ways to do it now. If you're going to try to make sense of all this, I mean, I keep a nice macro outlook just to have kind of like a framework, a map of what to look at. But if there's one thing these past 3 years have taught me, anything can happen.
Literally
So
anything.
keep an open mind. Like you see, I write in the Discord. I mean, tomorrow we're 70-something% chance we should be up tomorrow, and it should be a green day. That doesn't mean I'm shorting in my head. Like, I see the levels. Just because it's statistically a green day, and there's probably, I don't know, 15 different data points that'll point to that. There's no reason it can't be red.
Very true. Well, Brian, I appreciate you coming on the show. This has been a long time in the making. I'm
Pleasure.
definitely giddy. I know it's the first time you probably heard my voice. We've talked over DMs for probably a year or two now.
A year or two,
So.
easily.
Yeah. I remember when I came in. I actually want to tell a story. I was thinking back. I remember I found you on Twitter because you did a 25K account challenge.
Which I think are the stupidest things ever.
Yeah.
Not for nothing.
Well, hey, Brian, I did a 1K challenge on trade areas using your pivots, and I turned it into like 4.5, and then I went full port MNQ overnight, and I forgot to set a stop, so I lost like $2,000. But
That happened to a few people. They forgot, they fell asleep watching they were trading Globex, and they fell asleep trading and literally didn't put a stop. And I said, guys, if I get up in the middle of the night and put a trade in, even if it's a stupid stop, 20, 30 points away, which I would never use that wide of a stop, put it in just in case you fall asleep.
No, I was
because this guy was backwards. He woke up backwards 100 points. I'm like, you
yep, that's exactly what happened to me.
He goes, no, I was staring at the screen and fell asleep. I'm like, okay.
I was out too, so I was like, yo, guys, I got this new app. Check this out. Look what I can do. And then I fell asleep at like 9 o'clock and woke up, and I'm like, oopsies.
I said, that's part of the challenge. Try to be disciplined and follow your rules. It's a harder challenge than that's probably harder than turning 1,000 into whatever. 10,000.
That's actually one of our big things on the podcast. Our co-host Penny is on vacation right now, so we allowed for this episode. She always tweets out every morning stay disciplined, follow your rules. But it's one thing to say it out loud. But I have my rules; they're right on my screen. And if I'm starting to feel tilted or anything like that, I have ways to kind of manage it because it happens, right? That's the game we're in.
Well, when traders in our room are having problems or having a rough week, month, whatever, I say, I want you to DM me. Just DM me your morning game plan. And your first rule is stick to your game plan. You might be right, you might be wrong, but could you at least follow your own plan you've written?
That's a good point. Maybe I wanted to start doing that more, waking up and kind of scanning the market, see what kind of setups I like, and write down 3 or 4 setups I like. Like if I'm going to play an open range breakout or anything like that, and just stick to it. And I find when I do stick to it, I have great days. But the other days when I make one bad trade, I'm like, I'll just double down size over here and make it all back. It never works.
I would say a lot of traders were DMing me this month, and I would say they were right on their game plan if they just followed their plan. Probably 85-90% of the time. Now, it doesn't mean they made money all the time because they didn't follow the plan, and they knew it. It's guys in the room for every day, and he knows. They'll text me right after. I'm like, you must have done well today. And he goes, thumbs face down. He goes, I didn't follow my plan. I said, you wrote it out perfectly. Literally.
Yeah.
You were 3 ticks away.
You gotta love it. That's trading though. That's
didn't write the price. He didn't write the price. He flipped from his whole plan was long, and then he shorted, and then he chased short more, and he chased short more. Then he went to the biggest sizes of one in his life. I'm like, I don't see any of this in your plan, but your plan would have been perfect. So then he took same thing I told you. He took a few days off, writing the plans and being patient. And you know what? If you have something in life to do and you miss an entry, There'll be another one. That's
true. That's one thing that I've definitely learned. It's like, I missed this breakout. There's going to be 1,000 more for the rest of the year.
Yeah, the problem with me is I have all these good entries that are coming at 2 a.m, and then the one day I'll stay up or set my alarm clock, the market won't freaking move. I'm the anti-jinx for you guys if I get up for the European market to try to get a move.
All right, so if Brian's online at 3 o'clock in the morning, go back to bed. Got it.
Yeah. If I tell you guys, if you see me DMing, say, I'm up doing it, guys. Just say, okay, we're going to sleep. Market ain't moving.
That's how it
I think I'm
works.
1 out of 10 setting my alarm and waking up for Globex and the market actually moving.
What does your wife say when you wake up at 3 o'clock in the morning?
I just try to keep the thing really, really low. The first thing that happens when I light up the 2 screens in my bedroom, they light up.
My girl's done that before. It's like 4:00 in the morning. I'm like selling my runner I held overnight. She's like, "What are you doing?" I'm like, "Shh, you want to go to Cabo?" Like,
Usually I'll just run to the computer quickly, check the charts big, put my levels in, and then the rest I could just do from the phone.
there you go.
It's never anything huge, like overnight. It's something that I know we're gonna have to hold till 6 in the morning. But I'll be honest, if I get into it in the morning, I probably I'm out of it. Very rarely do I fall asleep.
Yeah, you're always drinking energy drinks, right?
I don't know. During the night, I just, you're watching it, and then I'm reading the European news, and I'm seeing European CPI, and Asia's this, and what's Russia saying right now, and watching the
Down the
candles.
rabbit hole.
But I like, you know what? It's so much slower. Like if you watch it, the entries are so much easier at night. That's actually, if you want to really learn how to trade futures, trading Globex night is probably the best way you can learn. You got to change your life schedule, but it's probably the best way because it's not 90 miles an hour. It's moving like 20 miles an hour.
You can also learn more too and take more in and be more patient. I've had a lot of success overnight. I mean, I can't really complain. I had a couple buddies message me like, "Hey, how are you getting your futures trades?" I'm like, Brian.
We got some good pivots, and I'm gonna actually post the monthly pivots.
Awesome.
We should do 3 standards. We got some big levels. I think we have to test these 21 EMAs on the. If you looked in the Discord, we got them sitting on 2 deviations. Standard deviation 2 on the ES is the 21, and deviation 1 on the Nasdaq. So we got to see what holds. I don't even know what the futures are. I don't even know where they are right now. Are we green? Are we red? Let's see. Hold on. We are.
Give me some good news. I got some 3x leverage SPY calls overnight right now.
It looks. We're 51. Yeah, we're 51.
Yeah. It looks good on the daily too. Maybe we flag out here for the next leg.
It doesn't look bad. It's trending up. I got us key level to take out. We got. Oh, you know what it is. We got to take out those 70 shorts, which would squeeze us to 80, and then my overnight level. But they could legitimately bring this now, 4209.
That'd be beautiful.
Now that's a hell of a deviation move, but
yeah,
they could.
That's gonna be a lot of resistance there too. 420 blaze. So you gotta.
Well, look at one thing. Here's one thing to learn. We hit 4202 at like what time? 2 in the morning last night or some weird ass time. It's the easiest people to stop out.
Good point.
There are shorts sitting there, so 4202 will get you right. You get past them. They'll get right to 4209.
Oh yeah, we did. I forgot we gapped up on Monday on like just trickling volume.
I keep forgetting it's Tuesday.
I don't even know my first name. I'm just kidding. But we do have to wrap it up. We are getting to the end of the show. Brian, I seriously appreciate you coming on here. It was fantastic.
Pleasure. Anytime.
Okay, so just to recap, Breaking Options on Twitter, and they can also email you at Brian Tepton at breakingoptions.com, right?
Tepton, just Tepton. TEPDON@breakingoptions.com. And don't worry, guys. You can ask any question. I'll answer it. You don't get charged for questions. I like helping out. I can teach you one thing.
I love it. That's why Brian's my guy. All right. Well, thank you so much for coming on, and enjoy the rest of your night.
You too. Thank you. Speak to you later.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.